All right, guys, so we're going to talk about Bitcoin today, and we're going to specifically talk about some of the fundamentals that prove its value. And so we're going to be talking about the theory, and I really apologize, this is kind of not the way I planned it. I had a whole setup over here. But what we're going to do is talk about the function of Bitcoin as hard money reimagined for our current society, for our current economy. And so it says the introduction to Bitcoin is a modern... I'm sorry, what was that? Okay, the introduction to Bitcoin is a modern hard form of money, highlighted its core, telnet, and time sovereignty and fixed supply, setting the stage for critical examination of traditional finance. Now, what that means is Bitcoin is hard money reimagined. And so if we kind of consider what Bitcoin is and how it works, there's a fixed supply to the asset, and there are no controls, there are no issuer. And so because of that, it's scarcity and permissionless, and it's easy to exchange peerlessly, or peer-to-peer, I should say. There's no middlemen. And so it offers a path to reclaim individual sovereignty over one's stored time and labor, challenging the foundational assumptions of traditional financial systems. Sorry, guys. Like I said, not everything's working the way we hope, so we're kind of just skimming it through here. So the core thesis is money is stored time. So your labor becomes value. So the productive time and your effort you invest becomes value, and then you take that value and you put it in savings to store it. And so this earned value represents deferred consumption, and it's stored as a claim on future goods and services. And then, of course, you take that and it becomes savings in the presence of purchasing power. So the function of the savings of the money is to reliably hold the money and hold the value over time. All right, so a robust monetary system ensures that time and effort you invest today is fully preserved for your future. So I guess if the question is if we're reimagining money, and we're starting to look at Bitcoin as a form of money that works really well in our current economy, what is hard money? And how do we duplicate that in a digital form? Well, the core pillars of the hard money equal scarcity. That's one of the major pillars of value of Bitcoin, is that there's 21 million total, and that is globally provable by anybody. It's also durable, meaning that in a sophisticated society where everything is illuminated and we use energy throughout the world, this is an energy system. And its value is comprised by calculating the computational energy that was used to derive it. Meaning we trust that computation over business or government's promise. And that is verifiable. So its authenticity can be easily and independently confirmed by anyone without the reliance of a third party. And that's really important because even now these days we're starting to see that our markets are soft even though they're containing hard assets. And then it's resistant to debasement. And debasement is when you have an asset and people are able to create more of that asset and take away the power or the purchasing power of that asset. And so hard money matters. It allows us to preserve our value over time. And so it's really important to understand that gold held that value for quite a long time. So for thousands of years, gold stored value and maintained its purchasing power across diverse civilizations. And because it did that, it became a really useful tool for our value. It was tangible, it was scarce, and it couldn't be duplicated. And so we knew that we could trust this item when exchanging and pegging value to it. And there was no central issuer. Gold naturally occurred, hence no government could control it and no government could alter its value. Okay? So for millennia, gold served as an unparalleled standard for hard money, embodying scarcity and independence in the physical form, before the advanced digital currencies that we see now today. Now, we use gold, and we still use gold today. The problem is that gold has limitations in our current world. Gold's limitations in the modern world are physical. So we have physical challenges to store and hold gold. If we are using gold, somebody must hold it, which means we are putting ourselves in a place of trust with an institution or body or individual to store that value and to account for it. Bitcoin is fundamentally different in that way. Also, custodial costs. Most institutions are not going to store it and hold it for free. Plus, it's going to be expensive because you need security, you need people, you need accountability, you need cameras, you need everything, right? And so it's expensive to store it. And then there's intermediaries and dependencies for price. So you have intermediaries interjecting themselves, you have supply-demand economics, price pushes, you have institutions pushing in large buys or cleansing or hedging and causing market disruption. And so you see a lot of different things today with gold than we didn't see even 100 years ago, because technology has allowed the gamification of markets. So when narratives shift, markets react. Now this is precisely what I mean. Here's an example. Precious metals volatility. We just had a huge run in gold recently. Now gold is a fixed supply asset. Gold holds its value. What is wrong? How were we able to pump and dump gold, silver, and copper all within the same time? And that is because we have the ability to inject emotion into these markets, which can change the value and cause people to flee from the market, buy from the market, or at least adjust their holdings in the market. And so the problem with that is we've placed our value in a tradable space that can be manipulated, and value should just be a storehouse for all of us. So future markets leverage margin trading, and futures markets significantly magnifies both gains and losses, leading to intensified cascading effects during negative shifts. And that is exactly what we witnessed recently with gold. All of a sudden there was a really popular narrative that we're going to need all of these resources for all of the computers to support systems that can run AI. And so they were able to emotionally pump the gold price because of that need. And because of that, they were able to move the market. And that is a manipulation. And so where value gets extracted when these policies exist is a problem, because the government and the central bank's decisions, such as inflationary targets or capital controls, can directly deleverage savings and restrict financial freedoms. They can erode purchasing power over time. This does not support saving for our people. It supports the government being able to extract value from economic growth and choose who gets it. This is a problem, and this is not how the economy is supposed to work. So we also have platform risks. We have centralized financial platforms, and intermediaries charge fees, control access, and can suffer from technical failures. We saw this in Coinbase. Coinbase was recently found as front-running transactions of their customers. So they were actually shaving money off the top of every transaction because they were front-running the transactions of their customers. So this is what happens when you see intermediaries enter the space, especially the new space, because it's unregulated. And so they can actually do this without any real risk. And one of the biggest ones we see is custody risk. Right now there is this new technology out here, it's called Bitcoin. And there are two major rules. Don't trust verify. Not your keys, not your crypto. Okay? And if that's the fact of this environment, then we have a custody problem, because the reliance on third-party custodians, banks, brokers, introduced counterparty risk, and they can actually freeze, confiscate, or make your money become inaccessible. And this is really important when we're talking about governments and the world. We want to make sure we remain sovereign, and we want to make sure that we hold and store value in a way that cannot be stricken from us. It's a really interesting time, and a lot of things are happening with tariffs and the government and rates, and people are talking about the second turning and how our economy is ready to turn over to another economy. And if that's the case, storing your own value independently might seem a little more attractive if you are looking at it from that lens. And then there's also market structure leakages. So you have opaque market structures, high frequency trading, so there's the bots, privileged access. So you know that in the stock market they have high frequency trading or front running, and institutions have parked themselves right next to the main Wall Street area so they can have a direct connection with high speed so they can trade ahead of everybody else. That's called privileged access. And that means they're going to be able to make money off of view every time because they're simply sitting in a different lane. And that is not fair trade. And so we have to figure out why we're moving to a fixed supply asset that has no issue or no controls, and why is right here, because our current system has leakages and extractions to it. And make no mistake, this is not a popular narrative to privatize money. And I'm going to play something here real quick. All right, you guys, so this is one of the primary bankers for the World Economic Forum. And, oh, do I not have audio? It's on mute. Thank you. There we go.
Interesting, because at present the use cases are concentrated on the crypto exchanges and a bit cross-border. I think it will come to domestic financial transactions, very significant. Could it come to domestic, quote-unquote, economic transaction, including retail? The jury is still out. But anyway, it will develop, and I think develop for the better. That said, there are threats.
There are threats.
As I am a central banker, let me insist a bit on...
There are threats. He just said it. As a central banker, there are threats. And he's like, so I will make sure I mention the threats to us and our system. Here is the threat.
At least I gave a speech 2 weeks ago with a triangle of threats and a triangle of answer, but let me sum up. The first threat is privatization of money.
Bam. The first threat to the current banking system that gives us 1% interest, takes 15%, locks us out of our money, and does not treat us fairly. They hold our money, they make interest on it, we go in for home loans, they charge us for a loan, we get the home loan, they crash the market, they get bailed out by the banks, and we lose our home, our money, our fees, and everything it took to gather that. And then they get made whole. So the threat to them is the privatization of money, meaning we all hold it individually. If the money is not in the bank, they don't have access and control. We do. And if we have control of our money, we become empowered. So don't be fooled by false narratives and a lot of what's going on. The second largest blockchain in the world possesses 0 of the traits of Bitcoin and represents exactly the opposite of money freedom. So let's really figure out who the threat is and who the threat is for. Is the threat for us? Will the privatization of money hurt the individual, or will it hurt institutions? And that is the important thing to understand. Government fiscal control. A decentralized money severely restricts the ability of national governments to inflate away debt and fund spending through currency debasement. They become disempowered on how they can move money. We have to agree and give them the money. We get a voice. Large financial intermediaries, traditional banks, and payment processors may see their fees generating services and essential intermediary roles become obsolete. So the very fact that they are building products right now for us to use in the blockchain space is actually counterintuitive. They have been handed their hat. The people have built an independent system to work without them, and they are starting to jump in to build products for us to use within that system, and again, control the money, take the money, fee the money. And this is a problem. They don't want to give up money. Central banks' monetary authority. Central banks face a diminished role in managing the money supply, setting interest rates, and directing economic policy. They will not be able to do this without the approval of the people if we hold our money. Systems built on monetary control, the entire edifice of state and corporate power that relies on centralized monetary control is fundamentally challenged by permissionless networks. Why is Bitcoin here? And if anybody knows what's stamped on the first Bitcoin, you will understand that the first Bitcoin has a message on it. And the message is reflecting to an event where government and large business colluded to crash the housing market for profits, take $30 trillion off the people's books and then get bailed out by the people paying taxes for it. So this is why we're here. We're starting to consider what we should do from a first principles perspective. Not what we're used to, but what we have experienced. My mic just died. I think there's powers that don't want me to get this presentation out. Okay, so anyway, why the system resists control. I just lost my mic.
You have the audio.
Oh, okay. So why the system resists control requires custody. So inflation as a policy tool deliberately debases currency to manage economic activity and reduces debt burden and stimulates spending and making savings challenging by eroding purchasing power. So is inflation good for the people? No. Right? Makes it harder for us to save our money and hold our money and store our value if we have inflation. Is inflation naturally occurring or is it induced by government? It's induced by government. There's no such thing as inflation. It is an insert into money to extract value around the people. Surveillance of transactions. So monitoring financial flows and tracking individuals, organizations, and spending, enabling governmental regulation, taxation, and compensation control over economic behavior. So our current system in banks tracks everything. You have to sign up, you have to have an account, you have to have KYC, AML, there's regulation, they know what you spend, when you spend, and if you've ever tried to move $10,000, come see me and see if they gave you a problem. Because they are starting to do or introduce monetary controls that do not let you move large sums of money unless they approve it. And I find that very strange because it's my money and I should be able to do with it what I wish, and it's your money as well. Capital restrictions, imposing limits on the movement of money, there we go, across borders and between accounts, preventing assets and preventing asset flight and maintaining domestic foreign stability and controls over monetary policy. That's really interesting because they use that as a guise of protection, but the truth is we should have our money and do with it what we want. It's not my job to make sure that this government stays sovereign. It's my job to make sure I stay sovereign. And if I stay sovereign, this government stays sovereign. And that's how it should work. The government is trying to make sure it stays sovereign despite the people. And the people run the government, not the other way around. Right? And permissioned access, requiring authorization of financial activities, creating barriers. Like we heard about the stock market, there's certain lanes for high-end people to trade ahead of everybody to guarantee their profits over others. And for individuals and businesses, ensuring compliance with central authority, rules, and regulation. So it is really important to understand there is so much complexity in the system. You can walk right up to it, and if you don't fit a particular mold, they can turn you away. That is not permissionless. Any human being with money should be able to walk up to our financial system, insert that money, and send it where they want, store it how they want, and have control of it at all times. Permission systems are the future of tyranny. You must understand that, because tyranny will go as soon as we lose control of all of our value. Okay, so enter Bitcoin. So after all of these issues, we enter Bitcoin and we have something that looks a little bit different, but still mirrors gold. We have a fixed supply asset. There are only 21 million Bitcoin that will ever be created. I run a Bitcoin Core node. I have personally looked at the code. I am a developer. There is only 21 million that will ever come out of the Bitcoin code. It's right in there. It will produce no more after 21 million, which means it's a fixed supply, globally recognized value store that we can trade, no government issue, no delays, full self-custody, no debasement, no controls. It's a big deal. So yeah, like I said, it's decentralized. There's no issuer. So there is no government that issues it. And what's really interesting is that French guy that was talking in the World Economic Forum, either he's misinformed, uneducated, or he's trying to cause confusion. He said, we won't want Bitcoin because nobody wants their sovereignty captured by America. That's what he said. He says it right after he says the big problem is privatization of money. And he is quickly corrected by Brian Armstrong, who is the head or CEO of Coinbase. And Brian Armstrong says, sir, excuse me, there is no issuer to get Bitcoin. It is a self-sovereign non-issued, non-government controlled asset. And he glossed over it as if the statement didn't even exist. He doesn't want that narrative to reach the ears of the people. He wants to create more confusion. Also, self-custody. This is really, really a big deal. Back in the old days, in the 1920s and 30s, people would grab bars of gold and they'd stick it under their bed. This is the rawest form of self-custody. They were able to take real value, unadulterated value. Nobody can argue that's value. And they were able to stick it someplace private where nobody could get to it during hard times. And because of that, they were able to preserve their value and then later on come out and use it. Right now, certain blockchains promote self-custody and private growth, yield. This does not exist in our world currently. You cannot make $1 into $2 unless you have a business or unless you collude with an institution to grow your value. An open market blockchain that allows you self-custody and growth outside of government rails, controls, and fees is a revolution, and we must understand that. Permissionless settlement. Transactions can be sent and received by anyone, anywhere, anytime, without the need for approval from an intermediary. And I know it sounds weird because we're like, we don't perceive these intermediaries. We perceive them when they lock us out or obstruct us. When everything's running smoothly, we really don't care. But if you've ever had to go do something and they stop you, you scratch your head and say, why am I playing this game with you guys? And that's really the question we're looking at today. So remember, a fixed supply asset changes everything. And make no mistake, right now, if you look at history and our economy, certain things are happening where we should be diving into a scarce asset value preservation state. In history, we have seen when rates go down and housing prices rise, it is in lieu of collapse, or at least a struggle for collapse, and fixed supply assets that hold value preserve it over others. And that is history, you guys. Self-custody, not your keys, not your coins. Control private keys. When you build your wallets, make sure you have control of your private keys. Do not let somebody build a wallet for you and hold those keys for you. Not your keys, not your crypto. Remove counterparty risk where you can. If you see people in between you and your money and access, my recommendation is to diversify by percentage out of that situation. You don't have to do 100%, but maybe 10% allocation into a private environment that you own and control. So you can kind of figure this out for yourself. I always recommend when I do boot camps with individuals and I sit with them and I teach them the tech and we build these wallets, we're always building in these testnet environments. So all the money's fake, all the wallets are fake, but the routine is the same. We sit there and we discuss all of these things and about how the government controls the money. And these guys are building their wallets in these environments and they're empowering themselves to get the confidence to store that value this way. And they're finding that they get much higher returns by privately holding. My greatest example is a very simple example. I have a client in 2021 bought $500 in Bitcoin. 4 months ago when the market was peaking at the 120s, that $500 had turned into $35,000. And that was in a 3.5 year cycle. So 3.5 years, 500 to 35,000. Okay, so, 500 to 35,000. So that doesn't happen in a savings account. If you were to put $500 in a US savings account today and you waited 3.5 years, you'd probably have about $505 in there, right? So you're not going to have any, or you might even lose money over fees. But my point is when you have your money in an open market where there are no debasements and no controls and you have full access, you get all the growth. Now, this is not an anomaly. We've seen this before in history. It was called the golden era in the 1940s, or in the 1930s before they took us off the gold standard, and we were all using dollar bills that had a gold seal on them. And you could actually take that dollar into the bank and you would get a little nugget of gold. They had that. They stopped that after we experienced a golden era where everybody got a 60% raise from economic growth that year when their dollars went up because they were pegged to gold. The government didn't want to see everybody getting that much money. There's a lot of a raise. If we can print money and debase it, They can only get 10%, and then we can take the 70% for ourselves, or 60% for ourselves, and we can distribute it to businesses and companies and really stimulate the economy how we see fit. Well, that's not right. The government should not have a right to take the economic growth that we create and distribute it where they want. It's our economic growth. We should get it. And then we should grow the economy how we see fit. And that's the disconnect that we're experiencing right now. We have controllers that are using our economic growth in ways that we didn't agree to. Okay? And so the responsibility increases. There are trade-offs for freedom. And with great freedom, just like everybody knows, comes great responsibility. And so we need to understand how to navigate these markets. We need to understand why they exist, how they exist, who's playing with them, why they're doing it, and that will help us to understand how to navigate the market ourselves. Are markets clean or are they manipulated? Markets are manipulated, guys. If there's ever anything out there, somebody's going to try to game it. And so what you have to understand, if gamification exists, then we must understand what to do and when. So navigating price volatility. So the path to monetary freedom includes accepting Bitcoin's inherent price swings, right? Understanding dynamics and personal risk tolerance is paramount for long-term conviction. So what that means is the market is a free market itself, and it's growing. And we also know that governments and large institutions know that it's a free market and it's growing as well. And they want to take advantage of that growth. And so they can position, move money in, raise the market, do some marketing, get everybody excited, pump the market, pull their money out, and drive the market down. This is called the pump and dump. The only problem is they cannot debase this environment. And the pump and dump gets weaker and weaker the more money gets in, because it really depends on the value that's going in and out. And so if we have a $900 trillion market and only $1 trillion is moving in, it's only going to affect the market very small. If we have a $4 trillion market and we have yahoos and large businesses that are throwing in $500 billion or $250 billion, they can significantly manipulate the ups and downs of the market. They can't debase you, but they can manipulate your value for a minute until more and more people start to pile in, and then all of a sudden it becomes ripples of water in an ocean of stability. And right now we're watching that ocean of stability rise. I've been here since the beginning. So I watched Bitcoin bouncing at $1. I watched it bouncing at $20, $200, $2,000, $20,000. It's rising, and the volatility is always staying at the tip. So you have to understand, volatility is part of it, and we want to make sure that we don't jump out of it because it's being pumped and dumped. It's a safer place to be than debased. Okay, so the absence of bailouts. Unlike legacy financial systems, Bitcoin offers no institutional safety nets. This means individuals bear full responsibility for their assets, freedom from third-party intervention. Like I said, with great power comes great responsibility. If the Bitcoin market is growing 50% year over year after 4 years, right, because we want to include a cycle, any 4-year time frame that you map, it's growing 50% year over year. If we are in an environment where we hold it and it cannot be debased, it's just pumped and dumped, if we hold it, we're still going to realize that 50% growth because they cannot debase away that growth, which is what we see in our current monetary system. Mastering self-custody security. If you are going to hold it, understanding there will be price volatility, but there will be market growth. And if you are going to hold it because there's going to be no bailouts and you're going to preserve your value, you have to understand the techniques involved in self-custody. This is not downloading a wallet from somewhere. Not your keys, not your crypto. Okay? And if you download a wallet that was made by somebody, who's to say in that code there isn't something that sends them some information about what you have or how to get access to what you have? There's no way to know. I teach individuals how to go to the Bitcoin core. I teach them how to generate a private wallet connected to no company, no human, and generate that wallet, test that wallet, and then they add funds to their private wallet. I help you guys build in your own entropy, your own randomness, because wallets, when they are generated, there's this little algorithm in there that generates a random wallet number. I teach you guys all of the steps to create what we call billion-dollar wallets, wallets that will not be hacked. And so continuous learning curve is huge. We got to make sure that we are learning because the technology is changing quite a bit, and we have to understand how money works. If we don't understand how money works, a lot of what people are saying over the news or a lot of what institutions are saying over the news can become quite appealing. For example, one of my favorite things, they're talking about Ethereum, the second largest blockchain in the world, and they're saying there's going to be a demand shock. Now, I've been in finance for a while. Does anybody know what a demand shock is? I've heard of a supply shock, where the actual produced amount doesn't meet the demand, but I've never heard of a demand shock. Now, I want you to understand this statement came from an individual that's pushing the second largest cryptocurrency in the world, the one that has no cap supply, the one that does nothing to mirror or copy Bitcoin in any way, shape, or form, that's being pushed by VCs and government. And so he is trying to create a sense of urgency that you need to go out and buy an asset that has no cap supply. Does that make any sense whatsoever? This individual sat there on CNBC News and said, hey, Ethereum's going to be huge. There's going to be a huge demand shock. I'm buying and stockpiling Ethereum and Bitmain, and I've got investors buying and stockpiling in Bitmain with me. Why are you stockpiling an asset that has no cap supply? Well, I'm doing it because Michael Saylor is stockpiling Bitcoin. And Bitcoin is big, and so Ethereum's going to be big, so we're doing the same thing. This is an illogical conclusion, considering the reason why Michael Saylor is stockpiling Bitcoin is because there's only 21 million, and this Yahoo over here is trying to get everybody to buy Ethereum, and there's literally an infinity sign on the cap supply on CoinMarketCap. So there's no cap supply, yet he's playing the same game. I think he is a scammer trying to convince people to buy trash. Okay, become so absolutely free that your very existence is an act of rebellion. I don't know why this is a cool thing to say, but gosh, it sounds pretty cool to me, because if all I have to do is take my own money that I made and move it into a private blockchain wallet and I'm a rebel, there's something else wrong with the system. So the question is what do you hold true? Or what do you truly hold? We need to learn time and understanding in Bitcoin principles, technology, the economy, the implications, knowledge of the first steps towards true sovereignty. We need to hold, acquire Bitcoin, become a direct participant in the new monetary future, move beyond speculation to thoughtful allocation. We need to verify. We need to engage in the open source nature of Bitcoin, understanding that its transparency allows for independent validation rather than blind trust. And of course, self-custody, the responsibility. Mastering the art of securing your own private keys, embracing the profound freedom, that critical responsibility of owning your own wealth. This is a really, really important thing to consider. Bitcoin redefines hard money for the digital era. It empowers individuals with a finite, verifiable, and secure form of wealth. This is an invitation to embrace financial sovereignty through education, responsible self-custody, and engagement with a true open monetary system. This is what we are talking about, you guys. And so I just wanted to say, if you are interested, please head over to my website at Truehold Crypto. I host boot camps, and I teach individuals the depth of blockchain from a code level, from a macro financial level, and then we teach you how to build private wallets, not wallets I've made, but wallets you will create independently in your home that you will store money in outside of the system. And you, because of that, will be able to capture and take advantage of the market growth that is currently being stricken from you in our current system. Any questions? We've got a big group. You know, with all the tech down, like everybody was walking out when nothing was working, so sorry, it just kind of emptied out on me. Thanks, guys. Yeah. Yes, sir?
Evaluate threats from quant computers.
I'm sorry?
How you evaluate threats from quant computers?
Oh, yes. So this is a great question. So how are we going to battle threats from quantum computing?
Yes.
And so this is a big discussion right now because quantum computing is going to be touted as something that breaks blockchain. Are you familiar with game theory? Have you dabbled in the thinking of game theory? So game theory is this cat and mouse game that technology will always run, and then bad people will run, and technology will run, and they always kind of keep pace with each other, right? And so the assumption is this, that quantum will get so fast that it will start to crack blockchain. But the assumption is incorrect. That would mean that blockchain would have to stay the same and not evolve. Right now, there's blockchain. They already have quantum resistant code in there. So there's already plans to dispel how quantum can try and crack Bitcoin. So the answer to your question is, should we worry about quantum? Of course we should worry. But we shouldn't worry so much that we don't move. We should get in, and then if something happens, it's going to be people getting hacked, and then you just slowly move out. You know, it's not like they know you. Because right now you're thinking, well, if it gets hacked, everybody's money's gone. That's not true. If everybody's self-custodying, then somebody would have to hack every single individual one at a time versus hitting a bank and getting everybody all at once. So the world is different now. We have to think differently about it. And because of that, we're much safer. So please don't worry too much about quantum. There's quantum resistant code being put in. Plus, you're thinking of, if they hack it, we're all done. No, no, no. If they hack it, somebody's going to say, oh my God, I got hacked. It was a quantum hack. And then all the other self-custody people will be like, I probably should look into something better. But you'll have time because you're not connected to any one entity. They're going to have to find you and hack you first. And that's safety, guys. You're a needle in a haystack of 9 billion people on the planet if you self-custody properly. So really, some of the worries that we have are because we all collude together and we're risking it all in one pot. Those things don't matter in this kind of world, okay? So really important to understand that thought. Yes, quantum is a problem. Yes, we should worry, but if we self-custody, we'll see it coming from miles away, and then we can just migrate to something else because somebody will figure something out. We can move it into something else. Great question, though. It's a big one on a lot of people's mind. Yeah. Any other questions? I always seem to have technical difficulties in here. I don't know why. I couldn't get the screen going for a long time or anything. Mic died on me. What's going on? It's crazy. All right, guys. Well, I think we're done. I've met my hour, so if you don't have any other questions, please feel free. If you'd like to get on my website and book a consult, if you go down there, you can just go to book a free consult, click on that, and that'll take you to my Calendly, and then you can jump in and grab my schedule. It looks like I only have 2 days left on this week. So yeah, it's getting pretty booked. All right. Well, I'm happy to help you guys out.